You wake up early, work all day, come home exhausted, look at your bank statement, and wonder why the money never seems to grow. You save a little here, cut back there, but at the end of the month, it feels like you're always in the same place, or even worse. You see people around you prospering, building wealth, living with financial peace of mind, and you can't understand what they know that you don't. That feeling of powerlessness sets in, as if there's a secret code nobody taught you, an invisible language of money that only a select few master. And the worst part is, you work hard. You put in the effort. You do everything right according to what you were taught, but the results just don't show up. I know this frustration deeply because I've spent decades observing this pattern repeat in thousands of lives. And today, I want to share with you something most people will never discover on their own. Today, I'm not going to teach you how to earn more money. Anyone can do that with an extra job or a promotion. I'm going to show you something far more powerful and much rarer. I'm going to teach you the secrets of how to make money multiply on its own. And here's the crucial point most people miss. Multiplication isn't addition. When you add money, you work for it. When you multiply money, it works for you. The difference between these two realities is the difference between financial freedom and financial slavery. But nobody teaches you this. Nobody explains that there's a completely different math operating in the lives of people who build real wealth. They aren't necessarily earning more. They're making money operate under different rules. Let me tell you what I've discovered over more than 7 decades of observing money, markets, and human behavior. Money has almost biological properties. It behaves like a living organism. It can lie dormant and slowly rot, losing value every day, or it can reproduce and create offspring that also reproduce, generating an exponential lineage of growth. The difference between these two realities isn't in the amount of money you have. It's in the environment you create for that money to exist. And here's the first truth that changes everything. Stagnant money isn't neutral. It's dying. Every dollar in your checking account is losing purchasing power right now. Inflation is like oxygen being drained from a sealed room. You don't see it happening, but it's happening, minute by minute, hour by hour, day by day. So when you think you're saving money, you're actually watching it slowly wither away. This isn't security, it's the illusion of security. Now comes the first secret, and it's so simple that most people completely ignore it. Money multiplies when it encounters time and rate of return. These are the only two variables that matter in the wealth equation: time and rate. But here's what nobody explains to you with brutal clarity. The time you waste at the beginning is the most expensive time of your life. It's not the time way down the road when you're old. It's the time now when you're young and your money could be compounding for decades. I've seen this happen repeatedly. 2 people start with the same amount of money. One puts it to work at 25, another waits until 40. The difference in the final outcome isn't 20 or 30%. It's 300, 400, sometimes 1,000%. Why? Because of a phenomenon Albert Einstein supposedly called the most powerful force in the universe: compound interest. But let me explain what compound interest really means, because most people hear the term and don't grasp the magnitude of what's happening. Compound interest is when you earn return on your return. It's when the money you've earned starts working as hard as the money you put in. Imagine you plant a tree. That tree bears fruit. You take the seeds from those fruits and plant more trees. Those new trees also bear fruit, which generate more seeds, which plant more trees. At first, you have one tree. After a few cycles, you have an orchard. After a few more cycles, you have a forest. But here's the detail that changes everything. In the beginning, the growth seems insignificant. You look and think nothing special is happening. One tree becomes two. Two become four. It seems slow. It seems almost irrelevant. But then something magical happens. The curve inclines. 4 become 8. 8 becomes 16. 16 become 32. And suddenly, you're no longer looking at individual trees. You're looking at a forest that covers the horizon. This is the moment most people realize the power of compound interest. But this moment only arrives for those who planted the first tree and had the patience to let the cycle unfold. You see, I'm not talking about theory. I'm talking about relentless math. If you take $1,000 and let it grow at 12% per year, a rate completely achievable in solid long-term investments, in 10 years, you have $3,105. Interesting, but not revolutionary. But let those same $1,000 work for 30 years. Now you have $29,960. You've multiplied your money almost 30 times. You didn't add a single extra cent. You just let time and rate do the work. Now imagine if instead of $1,000, you put in $500 every month for those 30 years. At the end, you don't have $29,000. You have $1,476,000. You put in $180,000 over 30 years. The money multiplied on its own and generated over $1,200,000 extra dollars. This isn't magic. This is the first secret working in practice. Time plus rate equals multiplication. But now comes the second secret, and this one separates those who truly understand from those who are just repeating what they heard. The rate of return isn't everything. The consistency of the rate is everything. Let me explain why this is so important and why most people get this completely wrong. There's a concept in financial math called volatility. Volatility is how much the value of your investment goes up and down over time. Most people think volatility doesn't matter as long as the average is good. They're wrong. Volatility kills compound growth. Here's why. Imagine you have $100. In the first year, your investment drops 50%. You're left with $50. In the second year, it goes up 50%. You think you're back to $100? No, you have $75. You've lost 25% of your capital even after experiencing an equal drop and rise. That's because percentage losses are asymmetrical. To recover a 50% loss, you need a 100% gain. And the bigger the loss, the harder it is to recover. So that's the second secret. Protect your capital at all costs. Consistent, stable growth always beats explosive, unstable growth in the long run. Always. No exceptions. I've seen it happen hundreds of times. People chasing huge returns, betting on risky ventures, trying to double their money overnight. Sometimes they get lucky, but eventually they take a big hit and all their accumulated gains evaporate. Meanwhile, the person growing 10–12% a year steadily without major ups and downs has been building real, lasting wealth. Because compound growth needs stability. It needs uninterrupted time to work. Every time you take a big loss, you're not just losing money. You're losing time. You're breaking the cycle, and time is the one resource you never get back. That's why I always tell people there are two fundamental rules of investing. Rule number 1, never lose money. Rule number 2, never forget rule number 1. This doesn't mean you'll never have a down year. It means you should never put your capital in situations where a catastrophic loss is possible. Because a catastrophic loss isn't just losing 50, 60, 70% of your money, it's losing years or decades of compound growth that you'll never recover. So the second secret is to build a system that grows consistently, protecting capital as if your life depended on it. Because financially, your life does depend on it. Now for the third secret, and this is where human psychology gets in the way the most. Money multiplies when you leave it alone. The biggest enemy of compound growth isn't the market. It's not the economy. It's not inflation. It's your own impatience. It's your need to tinker, to adjust, to react to every move, every headline, every fluctuation. Let me tell you something I've learned observing investors for over 70 years. The best returns I've ever seen came from people who invested and forgot. Literally forgot. They bought good companies, held on to the stock, and went on with their lives. 10, 20, 30 years later, they looked again and discovered they had a fortune. Why? Because they didn't interfere. They let compound growth do its work without interruption. Compare that to the person who checks their portfolio every day, reads every news article, buys when it's going up, and sells in fear when it's going down. That person might get it right a few times. But in the long run, they'll lose to the person who simply let their money grow in peace. Because every time you sell in fear and buy back when it seems safe, you're buying high and selling low. You're doing the exact opposite of what you should be doing. And worse, you're breaking the compound growth cycle. You're taking money out of the environment where it was multiplying and putting it into cash, where it's losing value to inflation only to buy back in at a higher price. It's a wealth destruction cycle disguised as active management. And I want to pause here because I need to ask you something important. Do you find yourself checking your investments daily, feeling anxious with every movement, thinking about pulling everything out when it drops and putting it back when it rises? If you're living this right now, if this anxiety is stealing your peace, I want you to do something. Type in the comments, "I check my investments every day." There's no shame in admitting it. It's the first step toward change. And when you type it, other people who feel the same way will read it and realize they're not alone in this fight against their own psychology. This is real. This is hard. And acknowledging it is the beginning of change. Go ahead. Comment now. I read them all. And this truly matters. Now, let me continue with the third secret. The truth is, the market will go up and down. It always has, and it always will. But look at the historical data. Over the last 100 years, the U.S. stock market has grown on average about 10% a year. But this growth wasn't linear. There were years it dropped 20, 30%. There were crises, recessions, wars, pandemics. But those who stayed, invested through all that have turned small amounts into generational fortunes. Those who tried to time the market and jump in and out missed most of those gains. Because the best days of the market, those days when everything jumps significantly, usually come right after the worst days. If you got out in fear, you missed the rebound. And missing the best days of the market completely destroys your long-term returns. So the third secret is to create an automatic system where money is invested every month regardless of what's happening in the world, and you simply forget it exists for years. You live your life, you work, you build your career, and the money will silently multiply in the background without you having to do anything other than not get in the way. This requires a profound mental shift. It requires you to stop seeing investing as something that needs to be actively managed and start seeing it as a plant you water every month and let grow. You don't pull on the plant to see if it's growing. You trust the process. But now comes the fourth secret, and this one is perhaps the most counterintuitive of all. Money multiplies faster when you reinvest the gains instead of spending them. It sounds obvious when I put it that way, but let me show you what that means in practice. When you invest in good companies, those companies pay dividends. Dividends are a portion of profits a company distributes to its shareholders. Most people take those dividends and spend them, or they take them and let them sit in their checking account. But here's what happens when you automatically reinvest those dividends into more shares of the same company. Now you own more shares. Those shares will pay more dividends. Those dividends will buy even more shares, and the cycle accelerates on its own. Let me give you a concrete example. Imagine you bought shares of a company for $10,000. This company pays a 3% dividend annually. In the first year, you receive $300. If you spend that $300, the next year, you'll still receive roughly $300. 10 years from now, you'll still be receiving around $300. But if you reinvest that $300 into more shares, in the second year, you have $10,300 invested. So now the dividends are $309. You reinvest it again. In the third year, you have even more, and so on. After 10 years of reinvestment, you're not just getting $300 in dividends anymore. You're getting $439. Your dividend stream has grown 46% without you putting in an extra cent. That's the power of reinvestment. But wait, it gets better. On top of the growing dividends, the value of your shares is also increasing because you have more shares now. So you're multiplying on two fronts simultaneously. The number of shares is increasing through dividend reinvestment, and the price per share is increasing through company growth. When you combine these two forces, the result is pure exponential growth. But this only works if you resist the urge to spend the dividends. And this is where most people fail. They see money coming in, and the instinct is to spend it, to use it, to consume it. But consuming the fruits of investment before the tree is mature is killing the goose that lays the golden eggs. You're eating the seed capital that should be generating more capital. So, the fourth secret is simple, but requires brutal discipline. Reinvest everything during the accumulation phase. Every dividend, every capital gain, everything goes back into the system. You're building a machine, and this machine only reaches cruising speed when you stop drawing energy from it prematurely. There's a time to live off your investments, but that time comes after decades of accumulation, not at the beginning. And the more you reinvest early on, the bigger and more powerful the machine will be when the time finally comes to enjoy it. And now we arrive at the fifth and final secret. And this one is what separates those who build real wealth from those who just play at investing. Money multiplies when you invest in assets that generate real value, not in speculations that depend on someone else paying more later. Let me explain the difference, because this is fundamental, and most people completely confuse it. A productive asset is something that generates wealth on its own. A company that manufactures products and sells them at a profit. A property you rent out and receive income from. A farm that produces food. These assets create value. They transform labor and resources into something more valuable than the sum of their parts. When you own these assets, you participate in that value creation. You are literally becoming a partner in the productive activity of the economy. Now compare that to speculation. Speculation is buying something with the expectation that someone else will pay more for it in the future. but the asset itself produces nothing. Gold is speculation. Cryptocurrencies are speculation. Buying stock in a company with no profits, expecting the price to go up, is speculation. I'm not saying you'll never make money from speculation. I'm saying speculation doesn't multiply wealth sustainably in the long run, because the return on speculation depends entirely on the mood of other people. It depends on someone being willing to pay more tomorrow than you paid today. And that game eventually ends. Eventually, the music stops, and whoever is holding the asset when no one else wants to buy loses everything. But productive assets are different. Their return comes from the value they create. If you own a soda factory, you don't need someone to buy your factory for more than you paid for it to make money. You make money selling soda. Every day, every month, every year, the factory produces and sells and generates profit. That profit is yours. And the better the factory gets at producing and selling, the more profit it generates. The factory's price on the market might go up or down based on people's moods, but the profit it generates keeps coming. That's the difference between investing and speculating. Real investing is participating in value creation. Speculating is betting on the moods of other people. And here's why this matters so much for multiplying money. Productive assets generate cash flow. That cash flow can be reinvested. It creates the fuel for compound growth. But speculative assets generate nothing until you sell them. They just sit there waiting for someone to pay more. You have nothing to reinvest. You have no fuel for compound growth. Everything depends on you selling at the right time, which is practically impossible to do consistently. So when I say money multiplies in productive assets, I'm talking about math, not opinion. I'm talking about how compound growth works in reality. You need continuous cash flow to feed the system. Speculation doesn't offer that. Now, let me tie it all together, because these 5 secrets work in conjunction, not in isolation. First, you understand that time and rate are the variables in the equation. You start early and aim for consistent returns. Second, you protect capital above all else, avoiding big losses that break compound growth. Third, you let the money be, creating an automatic system that works without your emotional interference. Fourth, you reinvest everything during the accumulation phase, fueling the machine until it reaches critical mass. Fifth, you invest in productive assets that generate real value and continuous cash flow. When you combine these 5 elements, the result is inevitable. Money multiplies, not by magic, not by luck, by pure physics, by relentless math. But here's what I need to tell you with complete honesty. These secrets are simple to understand, but incredibly difficult to execute, because they go against all your instincts. Your instinct tells you to spend the money you have now. The secrets say to invest and wait. Your instinct tells you to pull money out when the market drops. The secrets say to leave it alone or invest more. Your instinct tells you to seek huge returns quickly. The secrets say to accept moderate returns consistently. Your instinct tells you to take the dividends and spend them. The secrets say to reinvest everything. You are fighting against millions of years of evolution that programmed your brain to prioritize immediate gratification and avoid short-term risk. But real wealth requires you to ignore those instincts and trust the process. And here's the hardest part to accept. You won't see dramatic results at first. In the early years, it will feel like nothing is happening. You'll put money in every month and the balance will grow slowly. You'll look at your account and think you're wasting your time. You'll see other people making money fast with speculation, and you'll wonder if you're doing the right thing. This is the phase where most people give up. They can't handle the absence of immediate gratification. They can't trust the invisible process that's happening, but if you can get through this phase, if you can maintain discipline when everything in you is screaming to do something else, you'll reach the inflection point. It'll come at the moment where the exponential curve bends upward and growth visibly accelerates. I've seen it happen so many times, I've lost count. People who invested for 20, 30 years with no spectacular results, and then suddenly, in the last 5 or 10 years, their net worth explodes. Why? Because they finally reached the part of the exponential curve where the numbers get big. In the beginning, you're doubling small numbers. 1,000 becomes 2,000. It seems insignificant. But after decades, you're doubling big numbers. 500,000 becomes 1,000,000. 1,000,000 becomes 2,000,000. The rate is the same. What's changed is the base upon which the rate is operating. And you only reach that base through time and patience. So what I want you to understand is this. These 5 secrets aren't tricks. They aren't shortcuts. They are fundamental principles of how money actually multiplies in reality. Time plus rate, capital preservation, non-interference, reinvestment, income-producing assets. If you apply these principles consistently for decades, the result is mathematically certain. You will build wealth. It doesn't matter how much money you have today. It doesn't matter where you're starting from. What matters is starting and not stopping. Because every month you wait to start is a month of compound growth you'll never get back. And every month you keep the system running is a month that brings you closer to that inflection point where everything changes. You see, the great irony of money multiplication is that it's accessible to anyone, but very few people actually do it. Not because it's complicated, it's simple, but because it requires something far rarer than intelligence or knowledge. It requires patience. It requires discipline. It requires the ability to delay gratification. It requires the courage to do the opposite of what most people are doing. It requires faith in the process when the results aren't visible yet, and these qualities are rare. Most people want results now. They want to see money grow dramatically and immediately, and when that doesn't happen, they give up or change strategies. But constantly switching strategies is the surest way to never give any strategy enough time to work. So if this content is making sense to you, if you're starting to see money in a different way, hit that like button on this video and subscribe to the channel. Because what I'm sharing here isn't abstract theory. It's the result of a lifetime of observing how money truly works. And every week, I bring reflections like this that can completely change your relationship with wealth. Now let me give you some practical steps to start applying these secrets immediately. First, decide how much you can invest every month. It doesn't have to be a lot. It could be $50, $100, $200. The amount matters less than consistency. What you need is a figure you can stick to every month without fail for years. Second, automate that investment. Set up an automatic transfer from your checking account to your investment account on payday. Take it out of your hands. Don't leave it up to you to decide every month whether to invest or not. The decision needs to be automatic. Third, choose quality income-producing assets. Solid companies with a history of consistent profits and growing dividends. Index funds that track the overall economy. Real estate assets that generate rental income. Things that produce real value. Fourth, set up automatic dividend reinvestment. Most brokerages allow this. You check a box, and that's it. Every dividend that comes in is automatically used to buy more shares. You don't even see the money. It goes right back into the system. Fifth, and perhaps most importantly, Delete the brokerage app from your phone. Seriously, if you can't resist the temptation to check it every day, remove the temptation. Set everything up to run automatically and only look once a year when you do your rebalancing. This is the only way to ensure you don't sabotage the process. And now for the hardest part. You need to mentally prepare for downturns, because they will happen. The market will drop 20, 30, 40% at some point. This isn't a possibility. It's a certainty. The question isn't if it will happen. It's when it will happen, and when it does, everything in you will want to sell and get out. You'll see apocalyptic news. You'll hear experts saying, this time it's different. You'll feel real panic. But if you sell at that moment, you'll crystallize your losses and miss the recovery. Because the market always recovers. It always has throughout history. It might take months, it might take years, but it always comes back and usually goes beyond where it was before. So you need to program yourself now while you're calm and rational for what you'll do when the crisis hits. And the answer is simple. You do nothing. You keep your automatic investments happening. In fact, a downturn is when you're buying cheap. It's when your monthly money is buying more shares for the same price. That's good, not bad. But your emotional brain won't see it that way. Your emotional brain will see loss and want to flee. That's why you need a system that works on autopilot, that doesn't depend on your emotions or split-second decisions. Now let me tell you about something that might be the most philosophical and profound aspect of all of this. When you understand and apply these 5 secrets, you're not just multiplying money. You're fundamentally changing your relationship with time. Most people live in a temporal prison. They trade time for money. An hour of work equals X dollars. If they stop working, the money stops coming in. They're trapped in this linear equivalence forever. But when you build assets that multiply, you're breaking that equivalence. You're creating money that doesn't depend on your time. You're buying back your time. And time, unlike money, you can never get more of. Think about it. You have a finite number of hours in your life. Every hour you spend working for money is an hour you'll never get back. But if you use some of the money you earn to build assets that multiply, eventually those assets will generate more money than you could ever earn working. At that point, you achieve real freedom, not because you're rich in the sense of having luxury, because you no longer have to trade your time for money. You get to choose how to spend your time based on what matters to you, not based on how much you need to earn to pay the bills. And this freedom isn't just for millionaires. It's accessible to anyone willing to apply these principles long enough. I've seen people with modest salaries achieve financial independence in 20, 25 years simply by investing consistently and letting their money grow. And I've seen people with huge salaries reach their 50s or 60s with nothing because they spent everything they earned and never let their money work for them. The difference wasn't how much they earned. It was what they did with what they earned. So when you're starting your journey of multiplying your money, remember, you're not just accumulating numbers in an account. You're buying freedom. You're buying choices. You're buying the ability to say no to things you don't want to do, and yes to things that truly matter. And that's a goal worth any short-term sacrifice. It's worth resisting the temptation to blow it all now. It's worth the discipline of investing every month without fail. It's worth the patience of waiting decades to see the full results. Because what you're building isn't just financial wealth, it's life autonomy. To recap everything we've discussed, the 5 secrets of multiplying money are these. First, time and rate of return are the only variables that matter. and time wasted early on is the most expensive. Second, consistent growth and capital preservation always beat volatile growth in the long run. Third, money multiplies when you leave it alone, free from emotional interference. Fourth, reinvesting all gains during the accumulation phase exponentially accelerates growth. Fifth, investing in productive assets that generate real value creates the foundation for sustainable multiplication. These aren't tricks, they are laws of financial physics, and they work for anyone who applies them with discipline and patience. But here's the final truth I need to share with you. Knowledge without action is useless. You can perfectly understand everything I've said here and change absolutely nothing in your life. You can agree with every word and continue doing exactly what you've always done. And in 10, 20, 30 years, you'll be in the same place, wondering why nothing has changed. Or you can make the decision now, today, this very moment, to start. It doesn't have to be perfect. You don't need everything planned out. You just need to take the first step. Open the account. Make the first investment. Set up the automatic transfer. And then let the system work. The difference between people who build wealth and those who remain stuck in scarcity isn't talent. It's not luck. It's not intelligence. It's consistent action over time. It's the ability to do the right thing repeatedly, even when it's not exciting, even when the results aren't immediate, even when no one is watching or applauding. It's silent discipline executed over decades. And anyone can do it. You can do it. The only question is, will you? Because the clock is ticking right now. Every day that passes is one less day of compounding growth available to you. Every month you postpone is a month you'll never get back. The best time to plant a tree was 20 years ago. The second best time is now. And the same applies to investing. The best time to start was when you were younger. The second best time is today, not tomorrow. Not when you have more money. Not when you understand everything perfectly. Today, with what you have, the way you can. But start. And remember this, you're not just doing this for yourself. You're doing it for your children, your grandchildren, for the future generations who will benefit from the choices you make today. You're breaking cycles of scarcity that may have existed in your family for generations. You're creating a legacy that goes beyond money. You're showing that it's possible to change, that it's possible to escape the temporal prison, that it's possible to build true freedom through consistent, disciplined choices. That's the real power of multiplying money. It's not about having more stuff. It's about having more life, more choices, more freedom, more capacity to do good in the world and care for the people you love. Thanks for watching. If you made it to the end of this video, you're different from most. You're not looking for empty promises or get-rich-quick schemes. You're seeking a real understanding of how money truly works. And that's exactly what I build here on this channel. Every week, I bring deep reflections on wealth, mindset, and the invisible forces that govern our financial lives. It's not about tricks or shortcuts. It's about applied wisdom that comes from decades of observing markets, people, and behavioral patterns. If you want to continue this transformation journey, if you want to be part of a community of people who think differently about money, subscribe to the channel now and hit the notification bell. You won't get spam or impossible promises. You'll get real insights that can change your financial life forever. And every week, you'll be reminded that true wealth doesn't come from luck or magic. It comes from understanding the rules of the game and having the discipline to play them long enough. See you in the next video, where we'll continue this conversation about financial freedom and a wealth mindset.